we told the people about. It is a very interesting topic that everyone has to listen to, everyone has to learn. It is a very interesting topic. So, Mr. Sedoga, you can start from there immediately.
Thank you so much, Michael. So our last topic is common tax mistakes SMEs make. Mistake one is failure to register for taxes. Problem when SMEs fail to register for taxes, such as pay or income tax. What are the consequences? Non-compliance with penalties and missed opportunities for tax deduction. So if you fail to register for taxes on time, you miss on tax deductions such as startup costs and all those other deductions that come up. So what do we recommend? We recommend that you register for taxes with the tax body and receive tax identification numbers. We recommend that you keep registration details up to date. So this here we mean when you move from one location to another, you have to update the tax portal and the taxman so that they can know what has happened when you hit the VAT threshold, you register. So you have to keep on updating so that your data comes up to date, and also track registration deadlines, because there are some deadlines depending on the various taxes. Through experience, mistake two is on proper record keeping. You find someone is saying, I did everything, but they have no evidence. And no evidence, we can't confirm what you're saying. So most SMEs fail to maintain accurate records, including receipts, invoices, and other documents. So you find someone is claiming they did revenues or they incurred these expenses, they don't have any evidence. What does it lead to? It leads to incorrect tax filing, penalties, and challenges during audits. When the taxman asks you for anything, you don't have it, so how do you expect them to help you out? The solution is invest in accounting softwares such as QuickBooks and other softwares, or even you can use a beefed up Excel. Then implement routine for updating records regularly. So when an activity happens, you have to update your records so that you can file accurate returns to avoid penalties. Then you have to keep records for at least 5 years. So keep these records so that you avoid that mistake. Mistake three is mixing personal and business finances. I think we've talked about it. And the solutions here: operate separate business and personal bank accounts. Keep business-related expenses and revenues distinct. Don't mix them. Mistake four is late filing or non-filing. Because as you are aware, if it's a company, it has to file both at the business level and the directors level. So you find people have not filed for the directors, but somehow they have filed for the business, or both. So someone is operating without considering such consequences that can lead to penalties, late payment, and legal issues. The solution is to use the tax calendar or tracker to file the lines, the calendar or tracker as we shared it. Set reminders to file returns on time. I think this URA has done. It normally sends reminders. You are remaining with this, file this, file this, file this. So, and also consider using professional services to ensure timely filing. Kindly, if you can't do the work, kindly hire a profession to take you through the tax journey. It's not easy. It's not a smooth journey. So in case there are some clauses you can't interpret, use a professional tax advisor. Number 5 is underreporting income. This is common, underreporting income. Find some SMEs underreport income to reduce tax. This can result in audits, penalties, and legal action. Don't underreport your income. Report the income as it's supposed to be. Solution: accurate report of all incomes, including cash transactions. Keep proper documentation of all sales and services, and then finally, regularly reconcile your business records. Another common mistake is incorrect VAT filing. So you find some SMs is the 150 mark, they have not registered for VAT. So in case the taxman gets you, they disturb you, and maybe even your business can be locked. You have find you can get penalties and all these solutions. Use e-freeze as much as you can. Ensure proper VAT filing and reconciliation regularly, and then consult a consultant. Number 7 is ignoring withholding tax obligations. This is common when because there are some services that are mandatory to withhold. So you find some people don't withhold this VAT, leading to various consequences. Solution is understand the different withholding tax rates for the different types of payments. The withholding tax, we discussed it last year, and in our tax clinic. So you have to withhold, then deduct and remit withholding tax to the tax authority, and then keep track of payments subject to withholding tax. Another mistake comes in pay and NSSF compliance. This is very common for SMEs where some payments to employees are not taxed, some are hidden and all that. So this is common, so we recommend that put in place a proper payroll system to automatically deduct and collect pay and NSSF. And nowadays, pay and NSSF are synchronized. So the moment you file pay without NSSF, the taxman will come. Or the moment you register your company, the taxman will invite you to file NSSF. Not using e-freeze, this was a major cry. So this is also a problem that needs to be addressed by SMEs. Lack of tax planning and advisory. In whatever capacity you are in, we recommend you get financial advisory to avoid missing opportunities for the tax deduction, because professionals know which deductions are available for you, paying higher liabilities, and lack of preparedness for audits. Solution: consult a tax advisor regularly to optimize tax saving. Like some of you are going to wait when we reach June, that is when you start thinking about tax compliance. But we recommend that the journey should start before the year closes. Develop a proactive tax planning strategy. We talked of tax planning. And then stay informed about changes in tax laws and incentives. What are the few takeaways? The few takeaways are educate staff on tax obligations and compliance. As you are seeing us here training you about tax. So these initiatives were thought about by SINOC, and we came up with such a program. So this program increase your knowledge on tax, compliance and obligations, so we expect you to perform better. Then invest in accounting softwares to streamline financial operations, because this can maintain a huge amount of data. Then regularly consult tax advisors, maintain accurate, organized records to avoid errors and penalties, and use tax planning as a tool for business growth. Thank you so much. Shall entertain questions, if any.
Ladies and gentlemen, I'd like to thank Mr. Robert for taking us through the topic of common tax mistakes that SMEs make on a daily I have received some questions as follow-up questions. People really want to understand this topic very well, and I'll be reading some of these questions so that Mr. Robert answers them. But before I even read these questions from the various platforms, as a follow-up question, like to clarify on this when it comes to tax compliance, what are the most common tax compliance mistakes SMEs make, and how can they be avoided? The most common.
Late filing and non-filing. Late filing is when you file late, and non-filing is when you don't even bother to file your returns. This can be avoided by instituting a tracker of when you're supposed to file, using tax advisors, so that can avoid that. And also the other one is under declaration of income, especially for cash transactions. You find most SMEs, they only report transactions from B2B, business to business, and cash sales are not taken care of. Remember platforms like IFRIS, if you are dealing in inventory, if you stock in something, it can't go away minus you selling it. So if you only declare what you've sold on B2B, there can be issues. So those are the two mistakes that are commonly done by businesses, and silently people can admit to that.
Okay, now there is a question here. Someone is asking, what role does tax planning play in overall business strategy?
Now, because tax planning goes tandem with your revenue and expense planning, and also it falls under legal planning and risk management aspects. So by this, before you start any business or invest in any investment, try to get a professional advisor. They take you through the various taxes that are needed to be paid and what advantages do you have. That is why you see foreigners come from other countries. They use here our tax consultants and law firms. Then for them, they advised on where to invest and pay less. Yet for us, we just go omnibus because we are missing just that simple ingredient of tax planning. Yeah. For example, those recent tax laws we talked about, people are just going to apply them, minus coming to a professional advisor to take you through what is supposed to be done. Yeah.
Okay. Now there is I see a question here, and someone is like, what are the importances of accurate and detailed record keeping for tax purposes?
That is the record keeping is the deal breaker in taxes. If you know you filed for taxes and you have your records, you have backup. But if you just file taxes without any records, anytime the taxman can knock on your door and you have nothing to show them, that means you are a typical liar. You don't have evidence. Yeah.
And then there is someone here saying, can you how can SMEs balance tax planning with other business priorities?
I believe just like how working capital is important, tax planning is also important when transacting or doing business. For example, you because for example there is voluntary VAT registration. You can register for VAT voluntarily, but in doing so, have you looked at the plan on how you are going to be paying that VAT and all that? So it's a you know, strategy, and I think we shall get a session on strategy probably next year or something like that. So I take you through how strategies are made and how we come up with strategies. Yeah.
Okay. Then someone here says, what role can tax professionals play in helping SMEs avoid common tax mistakes? Yeah, role that you play.
Yes, tax consultants can give a bird's view on tax implications. So for them, they can know in case you're a small SME below 150, why should we waste time filing these normal returns? Why don't we use presumptive tax returns? If you're talking of putting this expense in the tax return, what is its implication? Is it allowed? It's not allowed. For example, rent. If you incur rent and your landlord doesn't give you his TIN, that is a wasted a business cost. Yet you might say, maybe I paid bad. So they give a bad view, like they know, first of all, they know the existing tax amendments and existing taxes and any other amendments that have come in. Yeah.
I think we have like 2 more questions here. What are some of the strategies for negotiating with tax authorities on appealing tax penalties?
One of the major strategies is engaging them to understand why they are, for example, giving you assessments. Because how that journey starts, they first send you an email. Can they come to our office? We talk through things. So after going to their office, you talk through, and then they might ask you for evidence before they give you penalties. And some can also come up and do audits. So if an audit is instituted on your company, it is better you hire a professional to first do the tax health checks before the external party comes in.
Now there is a question here. I think it's about, it's also still about how can SMEs identify and rectify tax mistakes before they become major issues? Before they become major issues, what should they do?
I think you can easily weed out tax mistakes by instituting tax audits or tax health checks. Consultant comes in, they look through what you filed and what you actually do, so they can easily identify. Yes.
Okay. So
because there are so many ways you can see where mistakes are coming. For example, if you're registered for VAT, you have more sales than what is in a VAT return, or you have less sales than what is in a VAT return. Those are red flags. For salary expenses, you have more salaries than what you filed in your pay return. So all those.
Yeah. Okay, I understand. So in all these, you are trying to say that most often all these SMEs fall into tax traps, like missing deadlines, poor record keeping. You also talked about and overlooking deductions under declarations. So you propose that awareness and proactive planning can help businesses stay compliant and reduce on these penalties.
Like forums like this. And URA is also doing the same. You see, they are going in different regions, spreading the news of the gospel of taxes. So I think now if you realize that phobia of the taxman has somehow reduced, traders interact with the taxman to understand what they are talking about and other changes.
Maybe can we say URA is not doing enough? Who is not doing enough to make sure that these people owning small SMEs are really compliant and they understand all this? Are they doing it in a language that these people don't understand? Is the accounting language so hard? Is the taxing language so hard? Or there are some ways they should really make these things easy for the business people to understand, because I think maybe when you talk about tax returns, when you talk about the common mistake, maybe some people want to hear them in their local languages so that they can really solve these issues.
No, like it's a two-way traffic. You, the businessman, and the taxman. Remember, ignorance of the law is no defense.
Exactly.
Okay, so we presume by that is why I'm insisting on this amendment of the 500 revenue. They are saying by the time you make that money, you can hire a tax consultant or an accountant to prepare books and submit them to the tax authority. So they are trying to avoid such things. And now, by the way, even some like if you have a dispute, they normally encourage you to come with someone who will explain to you whatever they have said. Yeah, because you might have trust issues because they are the people giving you assessments, and then they are the same people give you advice. Yeah.
Maybe you people who are in this trade are sometimes not fair to these people, because remember you have these small SMEs and they may need your help. Are you very expensive for them? Can you really do audits for them, or these people are trying to gamble? That's why many of them are having businesses that are failing. Maybe some of them are not even compliant because they don't have people to help them strategize and audit. Is it because you people are very expensive, people who are very well understand the trade?
How do I say? Everything variable has to be paid for. That is one. So and two, I don't think we are expensive. We are just by the way, we are the custodians of the economy. So we try to make sure whatever laws are set are followed and all that. So it is not about an expense because how would give you an example. Someone can be paying rent of 30 million, but they can't hire a consultant of let's say 1.5 or 2. So that is really a huge debate and a trade-off. I would not say we are expensive. Yeah, so it's about, because it's a culture shift. We are trying to shift from a certain habit and all that now to a new one, so it's expected. But after some time, I guess we shall realign and be on the same page.
Okay, thank you, Mr. Robert.
Welcome.
For our viewers today, I think we have learned quite a lot from Mr. Robert. Looking at the topics that we have learned today, at least we've picked something. When you look at separating personal and business finances, he talked about keeping personal and business finances separate, and he said this ensures financial clarity, simplifies tax reporting, and helps business owners make sound decisions without mixing personal liabilities with business obligations. And then when he was talking about capital management, He talked about effective management of working capital, and he said it helps businesses maintain cash flow, meet short-term expenses, and avoid liquidity crisis. And he said this involves balancing receivables, payables, inventory, and cash reserves. So that is a recap of what Mr. Robert has taught us today. I hope and I am very sure many of you have really got something, picked something, written some notes, and these notes can really help you. We will have these lectures on our YouTube throughout. Just go visit Vector Energies on YouTube, go subscribe to that channel, and you will be able to access these lectures throughout. Tomorrow we shall have another consultant who will be coming in here to teach us about something different. And remember, tomorrow we will start at around 9 and end at exactly midday. And tomorrow I encourage you, just keep sharing the link, tell your friends about it, that tomorrow we'll be having a very interesting topic for you guys to learn and really understand what business means. So we thank CNOC Uganda that is sponsoring this engagement, this training, and we also thank Vector Energy, the implementer of this engagement. They all say they really want Ugandans to learn, they really want Ugandans at least to be very good when it comes to business, and that's the reason that's why they had to organize this. For those that were here last year, you remember we had a 2 weeks engagement, and we will also have a physical engagement at the end of these sessions, and it will be happening in Hoima next Friday. So I encourage all of you to stick to our YouTube channel, because even that last physical engagement will be live here on our YouTube. I thank you for those that have been here with us throughout the day. We've had very many technical glitches, but I just say that tomorrow it will be fresh and we will be okay. I thank you. Have a good day. Bye-bye.
The Kingfisher oil fields development has evolved, reaching some significant milestones after CNOC Uganda Limited and its joint venture partners signed the final investment decision. Land for the construction of different facilities was acquired and compensation was fully made. Cash and in-kind compensation, like resettlement houses for all families, were built and handed over to the project-affected persons. Construction commenced for different aspects of the project, leading to the development of facilities such as the camps, well pads, the central processing facility, and feeder lines, followed by the delivery of the rigs and installation. Spudding was done in January 2023. There have been promising drilling outcomes, with 7 wells drilled in pads 2 and 3. Drilling operations, coring and on-site works are continuing, achieving total footage of approximately 23,000 meters. Other noticeable activities include a base station and permanent camp, solar turbine transportation, EPC 3-tank erection work, and EPC 4 pipeline trenching. CNOC will actively promote the LPG integration plan, which will gradually achieve the strategic transformation towards a green and low-carbon energy supplier. A camp integrated hydropower project has been set up, which will result in carbon dioxide emission reduction by 3,156 tons. CNOC has continued to contribute to the Belt and Road, people-to-people exchanges, enhancing China-Africa friendship and promoting the building of a community with a shared future for mankind. CNOC collaborates with various Ugandan universities to enhance graduate employment curriculum design and research. We have signed agreements with several institutions to support scientific research and develop talents in the oil and gas sector. CNOC, in collaboration with 5 other Chinese companies on the Kingfisher project, spearheaded a drive that led to the donation of $500,000 to upgrade the infrastructure of the Entebbe Welfare School. This is the largest donation to education in Uganda.
On behalf of the Ministry of Education and Sport, I would like to extend my gratitude to CNOC Uganda Limited and the contractors of Kingfisher Oil Fields for your commitment to the cause of vulnerable and challenged children.
SINOC sponsors international scholarships, sending Ugandan students to study in China under this program.